These stocks can protect your portfolio and earn passive income. With fears of recession, protect your portfolio with high-yielding stocks. Enterprise Products Partners. Solid footing with a strong dividend in midstream energy. Enbridge. With a dividend yield of 6.67%, Enbridge is a lower-risk, high-yield opportunity. AT&T. It still generates enough free cash flow to cover obligations and reward shareholders. Let's dive in. Here are the 3 high-yield dividend stocks that will keep paying out in 2023. Welcome to Timely Investment Research. High-yield dividend stocks are always worth investigating to make sure the payout is worth the risk. Last year, some of the biggest winners were high-yield dividend stocks, and many continue to be, and it makes sense. These companies are financially stable. Companies with strong cash flows and attractive yields outperform even the worst of markets. So if you are looking for reliable income, here are some solid yielders. Number 1. Enterprise Products Partners. With a yield of 7.26%, Enterprise Products Partners is one of the must-own high-yielding stocks to add to your portfolio. Enterprise Products Partners may be a boring master limited partnership, which operates pipelines, processing plants, and storage terminals, but its stock and its dividend are well worth cheering over. Plus, Enterprise Products Partners has a solid footing in the midstream energy space and is focused on financial stability and shareholder returns. In 2022, the company raised its yield by 5.4%, which should only increase from here. It also cut its debt by more than $1.3 billion last year. Better, it's also an essential part of the oil and gas industry. Number 2. Enbridge. With a dividend yield of 6.67%, Enbridge is another one of the lower-risk, high-yield dividend stocks to consider. The company has a wide moat portfolio, including the second-longest natural gas pipeline in the U.S., North America's longest crude oil pipeline, and a high-growth, renewable power generation business. Last quarter, the company boosted its quarterly dividend to $0.8875 per share. Moving forward, Enbridge reiterated its 2022 full-year revenue guidance for adjusted earnings before interest, taxes, depreciation, and amortization of $15 billion to $15.6 billion. It also announced 2023 earnings before interest, taxes, depreciation, and amortization guidance of $15.9 billion to $16.5 billion. In short, Enbridge should have quite a year in 2023. Number 3. AT&T. With a yield of 5.6%, AT&T is another hot, high-yielding stock to consider. Better, the dividend appears safe. Even with high levels of debt, the company still generates enough free cash flow to cover its debt obligations and still reward its shareholders. In fact, even with its debt, AT&T expects to generate about $16 billion in free cash flow for 2023. Better, AT&T generated $14.1 billion in cash flow in 2022, which was slightly higher than expectations for $13.8 billion. According to AT&T's chief financial officer, Pascal Desroches, as quoted by Barron's, "We are well positioned to stand a challenging economy." The company also just declared a quarterly dividend of $0.2775 per share on the company's common shares. Dividends on the common stock and Series A and Series C preferred stock are payable on May 1, 2023, to stockholders of record of the respective shares at the close of business on April 10, 2023. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.